Hello everyone. Unless you were living under a rock last week, you have heard about the presidential debates. And pretty much what everyone is saying, regardless of whether you listen to left-leaning news outlets or right-leaning news outlets, is that President Biden's mental health has declined and deteriorated to a level where they don't believe that he should continue running for president. In other words, everyone is starting to believe that Joe has got to go. It's gotten so bad that you can start seeing hashtags all over Twitter saying hashtag hot swap, implying that the Democrats are going to have no choice but to swap out Biden for a different nominee. And I don't even know if they can do it. I'm not too certain on how the convention works with the DNC because they're super delegates and Biden already has all the votes. But between now and the election, there's the RNC convention, the DNC convention, another debate that's supposed to go on between Biden and Trump. So it's going to be interesting to see what happens. As I mentioned last week, there was a piece of tax legislation that passed the House that didn't go to the Senate that was called the Tax Relief for American Family and Workers Act of 2024. And members of the Senate, specifically Elizabeth Warren of Massachusetts, had mentioned she didn't believe that this piece of legislation should be brought to the Senate floor because she thought that the Democrats would have more bargaining power after the election. I don't know if that's working out for her anymore after the debates. So what I wanted to talk about was, because it seems right now that the Republicans seem like they're ahead, and if the status quo stays and there is no hot swap, Trump is probably going to have all the cards to have tax reform going in 2025. As I mentioned last week, Trump's Tax Reform Act expires at the end of 2025. So I wanted to go over the things he's been proposing on the campaign trail so that way you guys are aware. In case you're not sure who I am, my name is Romeo Razi. I'm a CPA and I used to work for the IRS. So the first thing I want to go over is Donald Trump's signature tax legislation called the Tax and Jobs Act of 2017. Now this act was passed through Congress through something called budget reconciliation. Budget reconciliation basically means we can pass a piece of legislation through passing the budget, and we don't need all 60 members of the Senate, we only need 51. And so because of the rules of budget reconciliation, any tax reform, I shouldn't say any, but almost all big tax reform through budget reconciliation has a time limit on it because it has to go through one of the committees. And his signature tax act expires at the end of 2025. So the things that Donald Trump says he wants to do, the first is he wants to make many portions of his tax act permanent. So the Tax and Jobs Act had a bunch of different things. The first thing it had was it dropped the corporate tax rate down to 21%. Now, Donald Trump has also said that he wants to drop the corporate tax rate from 21% down to 20%. Second thing that the Jobs and Tax Act had said is it created something called the QBI deduction, which is the Qualified Business Income Deduction. That's great for businesses and entrepreneurs that own a business or are self-employed. And what it did was, in a lot of cases, it allows you a 20% deduction off your business income. So for a simple example, if your business made $100,000, 20% of that would be $20,000. So you would only have to pay tax on 80 grand. So he wants to make that permanent instead of temporary, how it is right now. The other things in there were that he increased the standard deduction, he doubled it, but part of doubling that is he lowered he got rid of personal exemptions, But what this did was it made it so less people had to itemize their taxes. So it simplified the tax code for a lot of people. Another thing that was part of the Job and Tax Act was the SALT cap, which is the state and local tax deduction. And this really affected blue states where they had very high income taxes. States like California, New Jersey, New York, because before the SALT cap, what would happen is you could deduct your state income tax on your Schedule A to itemize. So in a way, the federal government was subsidizing state income taxes. So what Trump did was he limited that SALT cap to $10,000. And it caused a lot of companies and people to move out of these states. In fact, there was one hedge fund manager out of New Jersey that supposedly he was responsible for something like 3 or 4% of all the tax revenue in the state of New Jersey. And he picked up his hedge fund and moved it to Florida. And the state legislature actually had to have a meeting when he moved regarding their budget. So he wants to make all that stuff permanent. Some of the other things that Donald Trump has talked about regarding his tax legislature, the first is he wants to get rid of income tax on tipping. And I personally think that's great. Because if you are making the majority of your income from tips, chances are you're not making a lot of money. There are very few people that make a lot of money just from tips. Now, I understand that if you're in a very high-end restaurant or if you're in a casino in Vegas, tipping is humongous. But for most of the country, if you are a person who makes most of your income off tips, you're not making a lot of money. And so he wants to eliminate income tax on tips. Now, one of the things you should be aware of, he mentioned that he wants to get rid of income tax on tips, but he didn't mention he wanted to get rid of payroll taxes on tips. So chances are, if you are working in a tipping industry and your tips are being run through payroll, you are still going to have to continue paying payroll taxes, which are Social Security and Medicare on tips. One of the other things Donald Trump had mentioned is he wanted, in place of raising taxes, he wanted to raise tariffs, specifically on China for goods and manufacturing from China to America, and he has floated around a 60% tariff. Now, I know that tariffs are very controversial. However, in the 80s, we had huge tariffs against the Japanese because their auto manufacturing was killing us. And to preserve American auto manufacturing, we put a giant tariffs on Japanese auto imports, and it worked. So that's another thing that Donald Trump has mentioned. Third thing that Donald Trump has mentioned is that he wants to increase the areas for opportunity zones. For those who are not aware how opportunity zones work, opportunity zones are areas designated in the country that are depressed. And what opportunity zones allow you to do is that if you have a capital gain and you take that capital gain money and you put it into an opportunity fund that invests in an opportunity zone, you can potentially either defer or eliminate all your gains off your capital gain, almost like a 1031 exchange. So let me give you an example. You sell a bunch of stocks and you make $100,000 and you normally have to pay a capital gain on that 100K. You take that 100K, you put it into an opportunity fund. The opportunity fund invests in opportunity zones. First of all, you defer the tax, and potentially in the future, you may never have to pay the tax on that 100K. So what Donald Trump has said is he wants to increase opportunity zones so more people can defer their capital gains income tax. The other thing that Donald Trump has mentioned is he wants to bring back a popular tax credit for manufacturing in America. Because right now, a lot of people are very nervous about the fact that most of our manufacturing is now overseas. And in some level, it's like a threat to the American economy because we're depending on all other countries. So what he has mentioned is he wants to bring a manufacturing credit back to America, so that way it will encourage companies to start doing more manufacturing here and not get things from overseas. Another thing that Donald Trump has talked about changing from his 2017 Tax and Jobs Act, that ultimately I believe he realized was a mistake, is he would like to go ahead and change the rules around research and development. Before his act in 2017, R&D expenses or any R&D costs were expensed on the income statement. And what happened was, part of the Tax and Jobs Act, he went and took that R&D and made you have to capitalize it. And so what that's done, especially in the startup realm, is it's caused a lot of companies that are cash poor to start owing a lot of tax. Let me explain. Is now all your R&D costs have to be put on the balance sheet with a mid-year convention. Meaning it doesn't matter if your cost is in January or in November. All of it has to be capitalized on the balance sheet and amortized over 5 or 15 years, depending on whether or not the expenses were incurred domestically in America or overseas. And so what that does is it takes 6 or 16 years to expense all of it. Because the first year you do half a year, then the next 4 years, and then the last tranche you deduct on the last half in the 6th year. And so what happens is you may get a bunch of money from a VC, you put all of it into R&D expense, that gets capitalized on the balance sheet, it creates taxable income, and you may not have enough cash in the bank account to pay the tax. And these VCs, they want their money going into growing the company. They don't want their money going to pay a bunch of federal tax. So this is something that Donald Trump has vowed to get rid of if he wins the election in November. And another thing that Donald Trump wants to do is he wants to change the rules for bonus depreciation. Right now, bonus depreciation, it's another thing where you take assets and you capitalize them on the balance sheet. Right now, bonus depreciation allows you to deduct 60% of that asset on the balance sheet, but he wants to bring it back up to 100% bonus depreciation like we had 2 years ago. As far as Joe Biden is concerned, as I said at the beginning, there's no telling if he's still going to be the nominee by November. Chances are, if he is, he's probably going to lose the election. However, if the hot swap is in and they do get another candidate and that candidate does win in November, chances are they're going to go and encompass a bunch of Joe Biden's tax policies. As you know, Joe Biden is tax positive, which means he wants to raise taxes. I made a completely different video about Biden and his unrealized gains tax. I'll make sure to link that in the comments. And if there's anything else that you wanted me to talk about or I missed something, please let me know below. Thanks.